Welcome to Signal to Alpha, your essential market briefing. I'm Lady Muriel, cutting through the noise to deliver what moves markets today. Let's get you your alpha before the opening bell. Quick executive summary before we dive in. SoftBank just delivered a surprise earnings beat despite missing the OpenAI valuation bump that powered last quarter. SpaceX insiders are finally able to sell shares today with over 900 million unlocking. And a food safety crisis is spreading with over 6,000 cases of parasitic infection traced to contaminated lettuce. Let's break down what matters. SoftBank reported second quarter net income of 347 billion yen, roughly $2.19 billion, handily beating analyst expectations of 147 to 166 billion yen. But net income was still down 18% year over year. CEO Masayoshi Son couldn't book gains on SoftBank's OpenAI stake this quarter due to uncertainty around the public listing timeline. Instead, a U.S. chip company holding stepped up. SoftBank's net asset value nearly doubled in the second quarter, the number analysts really watch. The stock has become Wall Street's de facto AI trade proxy, which means volatility tracks the broader artificial intelligence narrative. This quarter shows the portfolio has depth beyond just OpenAI exposure. Now to SpaceX. Today marks a critical lockup expiration. Employees and early investors can finally sell shares for the first time since December 2025. Up to 911.5 million shares are eligible for sale starting today, but another 455.8 million shares remain locked up because the stock underperformed. Weak recent performance actually limited how many shares can flood the market. The company just reported its first earnings as a public firm, and institutional investors got spooked. Second quarter CapEx came in north of $18 billion, roughly 40% higher than analyst projections. Most of that's going toward data centers and AI-related expenses. Retail investors bought the dip Wednesday, but today's lockup expiration could test that conviction. If insiders rush for the exits, that's your signal the people who know the company best aren't bullish at current levels. Finally, a public health story with serious restaurant sector implications. The FDA widened its Cyclospora outbreak investigation, now reporting 6,358 confirmed cases across 15 U.S. states. 2 people have died in Michigan. 6 new states were added since July 24th: Arkansas, Iowa, Missouri, Nebraska, New Hampshire, and North Carolina. The source? Contaminated iceberg lettuce from Taylor Farms de Mexico, supplied to Taco Bell. Taylor Farms recalled all lettuce from central Mexico on July 17th, but the outbreak started June 22nd, nearly a month before the recall. The FDA expects case counts to keep climbing because testing can take up to 6 weeks. If you're holding Yum Brands or any quick-serve restaurant heavy on lettuce, this is a headwind. 278 hospitalizations so far. Supply chain disruptions, potential litigation, and brand damage are all on the table. That's your signal to alpha for today. Subscribe for tomorrow's essential market briefing. Trade smart, stay informed. Check us out at capitalcopilot.io.